Okay, you can call your next witness, please.
Actually, I was going to see if Mr. Anthony could answer any questions in the event that the commissioners had any questions.
Okay. Any of the commissioners have any questions for this witness? No. Thank you.
Thank you. Then we would call Ryan Lee. Can you give your name and business address for the record, please?
Ryan Lee, 1300 Main Street, Houston, Texas. Okay.
Either push up or pull the mic a little closer
Oh.
to you, please.
Do I need to push that or no? Okay. Ryan Lee, 1300 Main Street, Houston, Texas.
Can you describe your employment with Energy Transfer, please?
I've been with ET for about 8 years. Title is Vice President of Intrastate Commercial Operations.
Have you always been with the intrastate gas group?
Yes, I have.
What are your current responsibilities with respect to the Riggs pipeline system?
So our group covers all of the long-term transportation contracts, renegotiations. Long-term is defined as anything over 1 year.
And did you say what your title was?
Yes, Vice President of Intrastate Commercial Operations.
And were you Vice President of Intrastate Commercial Operations in 2022 and 2023?
Yes.
And were you involved with the renegotiation of the contracts in 2020?
Yes, I was.
All right. Can you describe what you did with respect to the renegotiation of those transportation contracts?
So we evaluated the contracts, as Martin alluded to, they were all coming up for expiration. We worked with all of the shippers that were not bankrupt at that time, to try and renegotiate blend and extends, and try and continue to get those molecules on the pipe.
So what were the shippers that you were going back to? I'm sorry, what were the producers that you were going back to try to negotiate shipping contracts?
So, you know, I guess the bottom of this chart shows the contracts that we were looking at closely. The first company, the Triple B Plus company, that was, I gotta turn. Okay. That was a company that's a good example of a company that was purchased by someone else. We renegotiated that contract on a blend and extend. The rate for that was roughly more than 50% less than their previous 10-year rate. That credit rating A company, that company did not want to extend their contract due to their production curves and not having the ability to fill their transport. The third company there with the credit rating SD, this is an interesting one. That company actually filed for bankruptcy. And more interesting is their utilization on that contract was 0. So we didn't, I don't know what year that they ended up going bankrupt and stopped paying demand payments, but the utilization was not, they didn't use their transportation. So obviously that wasn't renewed. The remaining contracts, we were able to do blend and extends. Nothing was of the 10-year nature. Most were in the 5-year range or shorter. And I mean, I think the total was probably around 400,000 that we were able to renew in some form or fashion.
All right. So what are the current contracts that that Riggs has for shipping gas on its system?
We probably have about 15 transportation contracts, maybe 20 that, you know, they range in different tenors and rates. The longest one we've done to date is a 10-year extension of it, or sorry, it was a 10-year new contract. You know, that rate was 10 cents. That was done back in, you know, I think the end of 21. And subsequent to that, we've seen rates fall to the, call it 5 to 8 cent range for transportation.
So Mr. Anthony testified about demand and commodity payments. Is that how your current contracts are configured?
Yes, we still do the traditional demand and commodity payments. We also had to pivot to incentivize more flow on the system. Our job is to ensure that we have the highest utilization as possible on the pipe to drive revenues. When we saw the change in the market dynamics in the Haynesville, higher drilling costs, lower prices, where rigs is located, it's not in the best area of the Haynesville. The gas isn't as prolific as they once thought. We pivoted towards what's called a commodity-only firm service. The commodity-only firm service, it's a firm service agreement. It doesn't hold a demand component, otherwise known as a take or pay. In exchange for not having a demand component, it would hold an acreage dedication. So the acreage dedication would hold the producer to certain tracts of land, certain acreage. Anything produced in that acreage would have to come to rigs. That would be in lieu of a take or pay payment. And that would encourage them, hey, we still want you to drill. You're going to have firm service. You'll be able to deliver your molecule to the market, which was the east side of the system. But we're not going to hold you to the demand payments that caused so much pain during that expansion time that they were tied to. We had clauses in these agreements where, if you were, for example, if you had 100,000 of commodity-only firm capacity and you weren't hitting that number on an annual basis, we could claw back on that number so that we weren't holding space that a producer wasn't utilizing due to production curves or pricing or what have you. So we could claw back on that number, and maybe the next year it might be 80 million a day. And that would give us the ability to go out and remarket that 20,000 to, again, try and increase the utilization on the pipe.
So what's the current capacity based on your current compression? What's your current capacity on the pipeline system?
So it's about 1.2 to 1.25 BCF. And that's what we can currently move as maximum capacity.
And how much do you have contracted?
On a firm basis, we probably have 400,000 to 500,000 on a firm basis.
All right. So for 2022 and 2023, what was happening in the system at that time with respect to shipping volumes and revenues?
So calendar year 21, we were probably moving 675,000 per day. Calendar year 22, that number jumped up probably closer to 1.1 BCF. This is all directly correlated to price. We had I think Martin showed the slide where we did have a run up in price. Producers are fast to react to that price. We saw an influx of production volumes come into the system, as well as producers trying to take out capacity due to the fact that they were trying to move it to market. Predominantly, 95% of this increase in production came from the northwest corner of our system, which is upstream of what we call our Houghton compressor station. The challenge with that is that that's a constraint point for us. So we're constrained by pipeline capacity. We have a 20 and a 24-inch line there, and then constrained by compression. So the capacity on that side of the system that we can move for these producers is about 400,000 a day. The rates that we were getting from there range from, call it 10 cents. And then the open capacity that we hadn't contracted for back there, we charge our max rate of, 30-cent demand and 5-cent commodity. We tried to capitalize on this as long as we could while production was up, and producers were drilling. Again, it's very cyclical. Market dynamics have changed. We flowed 400,000 for a short period of time at max capacity. Today, we're maybe 50% utilization on that section of pipe.
But what would you say the percentages of utilization were for each of those years? And these are just averages based on what was reported on the R5Ts.
Yeah, so calendar year 21, if we're using the 1.25, because that's what our capacity is based on current compression, that's roughly 55%. And then we were around a 90 to 95% utilization for calendar year 22.
Now, I understand you did a capacity analysis for 2022. What did that capacity analysis show?
The capacity analysis showed that with our current configuration with compression, we with our current setup, our 36, if we had a 36-inch pipe, we could be flowing all of our gas today and making all of our deliveries.
And Martin described the horsepower. Could you use their 30-inch pipeline if you just added some horsepower to it?
Yes, that's correct. From a hydraulic standpoint, we could move compression around to effectuate a higher delivery amount on that 30-inch. One thing to keep in mind with that, moving compression around is very, very expensive. So it's a CapEx. It's not like you could just pick something up and move it. And so to effectuate that, we would have to have a deal that would support the spending of that $20 or $30 million to move that compression.
And so would your answer be the same for 2023 as for 2022?
Yes, that's correct.
So if you were rebuilding the pipeline system now going east, what diameter pipeline would you need to ship your current volumes of gas?
If we were designing a new system, from a commercial perspective, it would be a 30-inch pipe. That's based on when we look at the models, we want to have 100% utilization 100% of the time. It's not always possible. If you could say that you might not be able to flow the full 1.25 on a 30-inch pipe, but looking historically, in hindsight, that's okay, because there's some outlier years where you might not be able to effectuate the 1.25. But for all the other years, you're going to be at a 90+% utilization on the pipe. So from looking at a modeling and economic perspective, that's what we would recommend from the commercial side.
So switching gears just a little bit, is there a market for a pipeline system like rigs for sale right now?
I have not seen one.
And you mentioned before something about being on the wrong side of the Haynesville Shale. Does that factor into the marketability of these assets?
Yes, it does.
So what does it mean to be on the wrong side of the shale?
It just means that where the prolific production is, it's, the pipelines that are there is sufficient to meet the needs of the producers. The volumes demonstrate that the producers have shifted away from that region to go to other regions that are probably better connected to move the gas south. Shippers, in our case, the shippers are the producers. They're looking for the greatest net back for their molecule. And that net back is going to be greater going south and not going east.
Are you aware of whether or not Riggs has tried to find, or has Energy Transfer tried to find a buyer for this system?
I am not aware of that, no.
Is there a market for standalone pipeline segments?
No, there's not.
And can you explain why not?
So the way pipelines are built, you need supply and you need a market. If you were only to sell a segment that wasn't connected to a supplier market or just connected to one side, you just can't connect the dots. I think that's probably the best way to describe it. I think Martin's example of, buying a house or just a door is really good. It's just, you need the whole system to create the value.
And just for purposes of the record, if you look at taxpayer Bates number 77, is this the capacity analysis that we were talking about earlier?
Yes, it is.
So there was some discussion with Mr. Anthony about the single obsolescence percentage and whether that single obsolescence percentage applies across the entirety of the pipeline system. Can you offer some additional insights on that?
I think that no matter what the diameter of pipe, it's the same. It's all about utilization.
So can a buyer utilize a single segment of that pipeline?
No, they cannot.
So following back up on the capacity analysis that you did, would it be possible, if I understood that analysis correctly, would it be possible to simply idle the 42-inch pipeline?
Yes. Their operational costs, it's not as simple as just flowing gas across a piece of pipe. We look at it all the time. There's maintenance. All of the meters that are connected to the 42 are also connected on the 30-inch pipe. From an operational standpoint, that's great to tell shippers we have dual connectivity. It's also very expensive to maintain. It can very easily be that we effectuate all of our deliveries on the 30-inch pipe. It's a luxury to have both a 30 and a 42-inch pipe. And by luxury, I mean that in peak times, so in the winter on a peak load day, that 42-inch pipe might be used by gas control to effectuate deliveries. But on 95% of the time, if we can effectuate deliveries on a single 30-inch pipe, that's what we'll do. But we will use the tools we have and, make sure we make all the deliveries we can and try and flow at the highest utilization as possible.
Even if you kept the 42-inch, I'm sorry, even if you kept the second pipeline though, you still wouldn't need it to be a 42-inch pipeline. Is that
That's
upshot?
correct. That is correct.
And have you reviewed the appraisals that were conducted by Arthur Financial Services for 2022 and 2023?
Yes, I have.
And just to confirm, the property that's the subject of those two appraisals is the same pipeline system that we've been talking about. Is that correct?
Yes, it is.
Did you have an opportunity to review the financial information in those appraisals?
I did.
And do the financials in the appraisals correctly reflect RIG's financial performance in 2022 and 2023?
Yes, it did.
And what about the company projections? Are those the same projections that the company had, company management had for 2022 and 2023?
Yes, they are correct.
So this is a slide I believe that Martin used last year to sort of wrap up the situation in the Haynesville Shale. Can you go through this slide and explain the significance of these different factors to the commissioners?
Yeah, so, over the past few years, we've absolutely seen a decline in natural gas supply. Again, I mentioned this earlier, supply is directly tied to price. One thing that we should keep in mind is that Haynesville gas is traditionally very dry gas. So there's no liquid byproduct. Most importantly, there's not a crude byproduct as there is in the Permian Basin. What that translates to is in a low price environment for natural gas, the Haynesville is the first to get shut off. Permian production, as you guys probably have heard, is ripping, and that's because of the crude price, because they're not concerned with the price of gas. So when we see the decreased drilling activity in the Haynesville, where are those rigs going? Those rigs are going away from the Haynesville, and they're going to other places like Marcellus, Utica, and Permian. Rigs is a bullet pipe. It was built west to east to flow, deliver to the Perryville markets. Again, that's just not where the market for gas is today. There's a lot of gas that sits in Perryville. The demand is to the water right now. Every producer wants to get to the water. That's where the better market is. That's driven by LNG. What's hurt rigs were the bankruptcies of these anchor shippers during the expansion, and that was all driven by a reduction in production. and the rock just not being what they had thought it was going to be. You know, we desperately try and get long-term agreements on the 10-year side. They're very, very difficult to achieve. You know, I think the hardest part is, let's just remember, Riggs is not a pipeline where you bring in gas from other pipelines and then transport it to a market area, right? Riggs is driven by producers. Without the producers, we can't have, our utilization just goes to, you know, our utilization is only as high as our producers are producing. It's a different pipeline. You know, producers are not comfortable going out 10 years and saying, hey, I've got 10 years of production to pay a demand fee. And that's the biggest uphill battle we have. So the only thing we can do is to encourage flow, is to reduce rates, and try and be as competitive as possible.
Thank you. That's all the questions I have.
Good morning, Mr. Lee. Brian Addington on behalf of the assessors for Caldwell, Franklin, and Jackson parishes. You started out talking about your evaluation of the contracts, and I think you said there were 15 or 20 different contracts. You referenced the different terms and different tenure and rates and clauses in the agreements, differences in demand and commodity payments. Do you have that information compiled in any single source where somebody could look at it?
That's, to my knowledge, that's all confidential information. We don't share shippers. We're not an interstate pipe, so we don't post on EBVs what contracted volumes and rates are.
Okay, so this is confidential information. This is nothing that the assessors could review, is it?
I would have to refer to our legal on that.
Okay, well then, my same question asked Mr.
Well,
Anthony.
I'll rephrase that too, right? If someone were to ask me, hey, what did you contract and who did you contract with? I would not be able to answer that question, right? I mean, that's something that we don't share with other shippers.
And you certainly didn't provide that information to any of these assessors, again, for Caldwell, Franklin, or Jackson parishes, did you?
I'm a commercial guy. I don't talk to assessors.
Okay, and do you know if anyone else on behalf of Regency provided that information to the assessors?
Again, I'm on the commercial side. I work with our shippers and customers and transporters. That's my role.
Okay. You talked about the current capacity on the system. And again, that was system-wide, correct?
That's correct.
And would you agree with Mr. Anthony's testimony earlier that the capacity, and again, capacity is a function of both volume and capacity, would you agree with that statement?
I do not agree with
Okay.
that statement.
What do you mean by current capacity?
Capacity is design capacity on a pipeline based on diameter and compression, and
Okay.
what the pipeline can move from a hydraulically safe perspective.
So capacity has nothing to do with the volume or utilization. That's just a mathematical factor of how much gas can be carried in the system.
That's correct. Utilization is a mathematic equation.
Okay. And you heard Mr. Anthony testify that the capacity is going to change across the system. I mean, you're going to have a different capacity for a 12-inch, a 30, and a 42-inch pipeline, are you not?
That is correct.
And you are going to have a difference in capacity based upon whether it's compressed or not.
That is
not correct?
That is correct.
Can you tell me today what the current capacity of the 12-inch pipeline located in Jackson Parish is?
I cannot.
Can you tell me the current capacity of the 30-inch pipeline located in Jackson, Caldwell, and Franklin parishes?
I cannot.
Can you tell me the current capacity of the 42-inch pipeline located in Caldwell, Jackson, or Franklin parishes?
I cannot.
Okay, you also, I just caught this. You made some reference to 95% utilization in 2022.
That is correct.
Okay. I'm sorry, I was writing notes and I kind of missed it. Tell me what you were talking about.
So in 2022, if our average flow is, 1.18, I'm using round numbers, and our system capacity is 1.2 to 1.25. I mean, that's how I'm roughly coming up with a 95% capacity utilization.
So Regency had a 95% utilization in 2022.
That is correct.
What about in 2023?
Well, sorry, are you talking calendar years or there's just a discrepancy? So
Well, fair
what,
point.
what I'm talking, so calendar year 21, it was I think the numbers were about 675,000. So just divide 675, right, divided by 1.25. And in calendar year 22, it was a step up to, I think it was a 1.17 out of a 1.2 number, 1.25 number.
Yeah, so we are talking calendar years though, correct?
I just clarified that.
Okay, yeah,
yes.
no, that's, I just want to make sure. And so you had a 95% utilization in 2022. What was your utilization in 2023?
So I'm confused at this
So
question.
I think the confusion lies in the fact that the information that gets reported for the calendar year 2021 forms the basis of the January 1 valuation or January 1, 2022. So the calendar year of the preceding year, the utilization of the preceding year is what matters for purposes of valuation the next year.
No, I understand all that, but he said there was.
I'm not sure that Mr. Lee understood that.
Okay. Well, Mr. Lee.
So,
you
for instance, when you're asking him questions about what
I can
happened in
ask the
20,
questions,
no,
ma'am.
I'm just saying that for purposes of confusing the witness, it helps if you talk about the years that are actually at issue, which are the calendar years 21 and 22.
Actually, it's 22 and 23 in this appeal. Okay. Okay. Mr. Lee, you testified that in calendar year 2022, there was a 95% utilization. Is that accurate?
That is accurate.
Okay. Only question is, what was the utilization in calendar year 2023, if you know?
I would have to go back. That was not part of our, I thought
Okay.
we were dealing with calendar year 21 and 22.
And you testify, because this is actually, I wrote, even put a little star by it. You said it's all about utilization. That's what drives all of this, correct?
What drives the commercial side and what my role and job is to contracts and ensure that we are utilizing the pipeline to its fullest capacity.
Okay.
And if we do that, then everyone's doing well.
Right. Last set of questions. You were asked about the appraisal. You said you reviewed it, and as I wrote this down again, I was writing fast, so this may not be verbatim. Correct me if I have it wrong. You said that the appraisal accurately represents Regency's financials and correctly represents the business projections. First of all, did I get that more or less right?
Yes, that is correct.
Okay. I'm just curious, how do you know that it accurately represents Regency's financials?
When I say accurately represents, what I refer to is what our budget versus actual is. And I reviewed what our budget and actual is, and it is consistent.
Okay, you said, tell me what documents you reviewed. I'll assume financial statements?
I reviewed statements that I requested from our FP&A group.
And so you say statements, financials, what? are
No,
generic
just
referred to as financials?
just a snapshot.
Okay. Now, just ask, did you provide any of those documents to the assessors for Paul, Franklin, or Jackson parishes?
Again, I'm a commercial person. That is not part of the scope of my job.
Okay, I understand. I've got to ask. Do you know if anybody else provided?
Again, I'm a
Those
commercial guy.
financials.
I focus on getting,
Just answer yes or no to the question if you don't mind. We're
Uh,
repeating ourselves over and over again. If you don't know, just say, I don't know.
I don't know.
Okay, right. Then on the projections, how do you know that the projections were correctly represented?
The projections you're asking our budget? Is that the question?
I
Is that
don't
the
know.
question?
You said that that you reviewed the business projections in the appraisal and that they were correctly represented. So I'm asking you, how do you know
Again,
What they were
those
for-
numbers, to my knowledge, come from our FP&A group, our budget and actual. And I've looked at them and they are consistent to what I've seen
And what you've seen in what, where?
in our reports.
In your, again, financial reports?
Again, in the report that was the snapshot that was provided to me by our FP&A group.
Okay. And so that's the same report you were talking about a moment ago, correct?
That is correct.
Okay, so same answer. Thank you. No further questions.
Anything else? Kim?
Mr. Lee, you testified last year, is that correct?
That is correct.
And do you recall if the three assessors from Caldwell, Franklin, and Jackson parishes were here during your testimony?
Yes, I do.
And so the different matters that you talked about this year, you also talked about last year, is that correct?
That is correct.
Much like Mr. Anthony's testimony, it seems that Mr. Eddington is trying to suggest that somehow these pipeline segments can be operated separately. Is that the case?
You can operate a pipeline segment individually.
So I think before you said that it has to be system-wide.
That's correct.
So with respect to the discrepancies about the years, the utilization, the information that you were looking at for 2021, when the the volume shipped was about 675, and the 2022 calendar year when the volume shipped were about 1.2. As far as you know, is that information accurate for those 2 years?
Yes, as far as I know, it is.
And you're not in the tax group, so you live in the commercial world with calendar years, not tax years. Is that correct?
That is correct.
If commissioners have any questions for Mr. Lee?
Any questions from the commission?
Mr. Chair, I have a question. Just going through my notes, if you could, Mr. Lee, and going back to Mr. Anthony's testimony, just to get clarification on the utilization. The 2009 expansion, I have a note that the post-expansion capacity was 2.1 BCFs. And then the utilization in 2021, that would have been reported for 2022 assessment, was anywhere from 25 to 50%, which comes back to what I think you were saying, 50% roughly. And then in 2022, an average of 1.1 million, or 50% of that 2.1.
Yes, so just to be clear, right? So the 2.1 design capacity after the expansion, that was the design capacity that's fully pressured. And then due to lack of production and based on the flows, we moved compression as Martin had suggested. So although from a pipeline perspective, you could effectuate 2.1 BCF of flow fully compressed, we don't have those assets on the ground to move that much gas. The
Okay.
maximum we can move is the 1.2.
So I think that answers my, so it's due to compression
Yeah,
change
that's
that the
correct.
number went down to 1.1.
That's correct.
And it's because assets were removed because you weren't getting the demand or the flow of that gas?
Yes. So what we do is if the compression assets aren't utilized, we will repurpose them and move them to another system instead of purchasing a new compressor, just to save on capital cost.
Okay, thanks.
Mr. Lee, in the event that you have a customer that would require you to ship volumes above the 1.2, what would it take to move the additional compression back to the system?
So that's a good question. So real world compression cost about $25 to $30 million per unit to move. How much a unit can move just depends on its size, and where we're trying to make the delivery. I think a better answer to your question is if we had a producer come in that said, hey, we've got, another 250 million a day of production that we need to move on your system. Can you move it? The answer would be we can move it, but where do you want to go? And they're not going to want to go east. They're going to want to go south. And we would spend the CapEx to produce an interconnect to deliver into a pipe that would move south. There's no value on this pipe to continue to expand to move more molecules east. We would be offloading that gas on the south side of our system going south, and that would be off of the 36 expansion.
And how many compressor stations do you currently have in the eastern part of the system? At Cane Hill, I think is what it's called.
There are 4 units at Cane Hill.
And are those 4 units currently fully utilized?
They are not.
So would you be able to utilize those compressor systems?
We would have to relocate them to push that gas south.
If you had a customer who wanted to move it east, would you be able to move it east?
We could effectuate flow. We would have. I couldn't tell you how much more we could flow east.
Thank you. That's all I have.
I have another question, Mr. Chair, and pardon my lack of knowledge of this industry, but is a compressor an actual asset that picks up and moves to an, so for instance, if there was a compressor, and I'm just going to guess a parish, Jackson, and then it moves into Caddo, is it actually moving from one location to another?
Yeah, it is.
So, and maybe, I'm not going to ask you the question, but Mr. Edrington, maybe for your assessors or someone to address somewhere down the road, if at some point when there was utilization in these parishes and that compressor station was active, when it is no longer feasible to have that amount of compression in that area, that asset is then moved to another parish. I assume that that asset, that compressor comes off of the tax roll at that point. So indicating that there's no longer usage of that asset in that parish.
Correct. And obviously it would show up on the whatever parish it was moved to.
Okay, thank you.
Any other questions from the commission? Okay, thank you.
All right, at this time, we would call Megan McCavanagh. Ms. McCavanagh was the former Director of Property Tax for Energy Transfer, and she was the one who was responsible for the tax filings or oversaw the tax filings for 22 and 23. And she left the company in 2024. And so in lieu of having live testimony, we are simply going to play her video from last year. And this is pursuant to a stipulation with Mr. Eddington.
That is correct. We have agreed to that. Oh God, we're at the same time.
Ladies would never make that.
I was referring back to, the 1920, at that point in time, yes. Is the utilization of 30-inch pipe only 30 inches? Do you mean what's the capacity of a 30-inch pipe? No, I mean, okay, we're talking about 42, yep. And you say you really only need a 30. Is there any correlation between the percentage of utilization between the 42 and the 30? So a lot of it is compression related, right? So, the more compression you add to a pipe, the more throughput you can get. But typically with a 30-inch pipe, you could flow up to 800 million a day.
Bishop, can we go off the record a moment and let them,
Okay, thank you.
oh, you're so close.
State your name and business address for the record. Megan McCavanagh, 800 East Montero Boulevard, San Antonio, Texas. What is your current title? I'm currently the Director of Property Tax employed by Energy Transfer. Can you give us your educational background, please? I have a BBA in accounting, a BA in psychology, and an MBA. How long have you been with Energy Transfer? 15 years. And what have the different positions been over that time? From manager of property tax to director of property tax. Sorry, as director of property tax, what does that position entail? Currently, Energy Transfer has their part, tax as part of the shared service group, and so we represent all ET companies and Sunoco companies. So I have over 130 legal entities underneath me. I have a really small internal property tax group. We have 5 other people. Myself would be 6. So I employ, I engage consultants to come and help us because, you know, as you can see from the binder, this is just one legal entity and we have 135. So it takes an army to get all the property tax work done across 41 states. So what is the relationship between Riggs and Energy Transfer? Currently, Riggs is a wholly owned subsidiary of Energy Transfer. What was the relationship with Melinda during the time of their joint venture? Melinda was Riggs' joint venture partner at 50-50 between Regency at the time, Energy Transfer, and Melinda. Right, and in terms of accounting, what sort of accounting was done during that joint venture time period? My accounting responsibilities are related to property tax estimates, accruals, payments, budgeting. But we also work with financial data. We receive financial data to complete our returns, renditions, valuations. So while we don't prepare it, we do receive it. Did you work for Riggs at the time of the expansion in 2009? Riggs was one of the entities I was responsible for, yes. And were you involved in any decision making with respect to the 2009 expansion? No, in 2009, Regency was not part of the Energy Transfer. But I didn't have it. I was not part of it until 2010 when Energy Transfer and acquired Regency. Did not acquire Regency, but later, but we had another public, just like currently I have Energy Transfer and Sunoco. Back then I had Energy Transfer and Regency as publicly traded companies. Okay, let's take a quick look at the before and after org chart. Right, does this accurately reflect the organizational structure during the joint venture? Yes, this is during the joint venture. Yeah. For Riggs, it's Energy Transfer, ETE is understanding of the Linda's involvement with Briggs? They were a private equity firm that purchased an interest in Briggs and about, yeah. So what's the responsibilities that you have, or interaction you have with the Linda with respect to tax matters? If joint venture partners ask about, the property taxes or explanations, we do communicate with them. Linda did reach out directly to us with property tax concerns in 2017. So we did have a lot of discussions with Linda starting back in 2017 over property taxes. What were those sort of discussions about? They were concerned that property taxes were too high compared to the revenue that they were seeing. So they were asking what kind of valuation approaches we were taking, if there was anything more that we could do, if we needed additional help or estimates going forward. What did the future look like for the system as far as property taxes? At this time, the property tax comprised approximately what percentage of your operating expenses? During Belinda's term? Roughly about 20%, 10 to 20%. And what percentage of your operating expenses currently is property tax? 50%. It is half. Were you involved in the Linda sale for the Briggs purchase of the Linda interest in 2018? I was not. Were you asked to prepare any information or any accounting information in connection with that sale? I was not. And compared to the 2018 sale, have you prepared any information in connection with Linda's efforts to market its interest? I did not. And what is your understanding of the reason that Linda sold its interest in partnership? They weren't earning a rate of return that private equity firms can really typically save or expect to earn. Did anything that you do with respect to the property tax change as a result of that sale? No. Briggs was still in operational systems, no responsibilities changed as far as property taxes. Were there any accounting changes? The main accounting change that would have happened from Briggs being a joint venture is joint ventures have separately audited financial statements, and Energy Transfer has all of their legal entities roll up into their 10K, and it is audited as a complete entity. And you provide information that to the auditors that gets rolled up in it? Yes. Describe that sort of information, please. My information would be all of the property taxes, but as far as Energy Transfer as a whole, it would be every fully owned subsidiary would roll up into the Energy Transfer Grant Thornton audit. Are there any specific requirements for asset description or asset valuation? No. Mark, you mentioned that yours is a fairly small department, and that you use outside consultants. Is Property Tax Partners one of those outside consultants? Yes, they are. But how did you come to use property tax consultants? They've always used property tax consultants. When I first started at Energy Transfer, I was a whole department of one. So there was no way I could do everything internally, much less get everything done that required to go to states, counties, parishes, hands. So we've always used consultants. We've used Property Tax Partners for well over 10 years now. They're really an extension of my in-house tax department. I couldn't do it without the team of helpers. Where do you get Briggs's financial information? Financial information is provided from the Financial Reporting Department. Paige Edwards is our assistant controller. She couldn't be here today, but she did provide an affidavit validating that our financials are the statement, fixed asset listings. And then what do you do with that information once you receive it from the financial reporting team? Council, property tax partners. And do you sort the information or manipulate the information or do anything otherwise with it? I do not. A lot of times they get it directly with them having a 10-year plus relationship with Energy Transfer. They're also ingrained internally and know a lot of the department heads. So a lot of times property tax partners will just reach out directly to a department head and copy it on the emails. And so if they make a request for information, you're copied on it. Are you separately asked to make that request? I am not, and I do not manipulate the data in any way either. So in this case, in connection with Bridge 2019, 2020, and 21 appeals, what sort of information would you have requested from the financial reporting team? Balance sheet, income statements, fixed asset listings. We also get utilization reports. And who would you provide that information to? Taxes. And you know what property tax partners do with it after they receive it from you. They review it, digest it, and use it to report property tax remissions. You mentioned that Energy Transfer has its audits, ranking audits. Are those audits publicly available? Yes, you can find them in our 10K. And is this the same information that you request for property tax purposes? Yes. And it's the same information that you provide to property tax partners in connection with these 3 tax year reviews. Correct. Everyone's using the same info. How many other energy transfer entities are rolled into the overall energy transfer market? I handle 134 legal entities that have operating assets, but we have hundreds of legal entities. Not all of them are operating entities. We have a lot of disregarded entities and holdcos. We have a very complex org structure. We were going to print out our org chart. It is 29 pages long. And so which entity actually owns the Regency pipeline system of assets? We refer to it as RIGS, Regency Interstate Gas. And that's the legal entity? Yes. So in the chart that we were looking at earlier, which one of the entities is RIGS, the company that owns the assets? Yes, which of these entities that shown in here is the entity that actually owns the assets? Regency Interstate Gas LP. And there were some questions earlier about whether or not that entity still existed as an LP or an LLC. I am not sure if it is an LP or an LLC. We merge, consolidate, simplify. So I'm unsure which one it is presently. Are you aware that there was a third-party appraiser that was retained in connection with these 3 tax year appeals? Yes, I engaged her. Right, who did you engage? Patricia Cartwright with Arthur Financial Services. And how did you select Arthur Financial Services? Patricia actually did a 2017 appraisal for RIGS. We did it to help explain to the Linda Capital Partners kind of what was going on and what we were seeing and to support our property tax values. But Arthur Financial Services also does a lot of other work for Energy Transfer, purchase price allocations, as well as other appraisals. She does other appraisals for property tax purposes. connection with, in 2017, in connection with the environment. Yes. Right, so tell us about that. I wasn't involved in it, but I do know that there was an impairment, on the assets. And what did you do with respect to the appraisal at that time period? We had Arthur Financial Services do an appraisal in 2017 of business enterprise value. And was that information provided to Working Tax Partners? Yes, it was. And did that include at the time a tangible asset appraisal? We had a tangible asset appraisal done in Arthur Financial Services also did appraisals for rigs in 19, 20, and 21. All three of those years were business enterprise, except 2020 also had a fixed asset appraisal as well. So specifically for 2019, what is it that you asked Arthur Financial Services to do? To prepare an appraisal of business enterprise. And what was the purpose of that business valuation for property tax purposes? And is that to find out the value of the assets that were on Louisiana? Yes, to find out the fair market value of the assets. Right, and what about 2020? 2020 the same, we wanted to know the fair market value of the assets, and that is the year that we had the fixed asset appraisal done. And what about 2021? 2021, the same thing, we had a business enterprise valuation done. Right, so did Ms. Cartwright on behalf of the Financial Services accomplish what you set her out to do? She did. Right, well, what is it that she provided back to you? She provided appraisal reports for all the years requested, and we received fair market value. And for your purposes, are these reports acceptable for the company? Yes, they are. And are you using these valuations for pre-tax purposes now? Yes. And what about for any other accounting purposes? No. And so what is it that you're asking the commission to do today? To recognize that rigs does have economic obsolescence. The pipe schedules that are utilized by Louisiana do not capture economic obsolescence. If it did, our value would yield in a similar ballpark to what our current appraisal is. We're looking for fair market value. What other jurisdictions where you're involved with property tax, do they value property the same way Louisiana does? Not by other jurisdictions do, other states do have pipe schedules, but they'll also recognize economic obsolescence. What has been the impact on rigs operating in Louisiana as a result of these taxes compared to its revenue? Well, our revenue has fallen off the cliff, and currently our property taxes are 50% of our revenue. How has that affected operating? Well, the rate of return is really low on it. It doesn't look like a very good, profitable entity. Is there a market for an entity like that in North Louisiana now? You would have to ask commercial. So at the conclusion of this testimony, Riley walked through some of the factors that were at play in 2019, 2021 in connection with the transportation contracts and revenue impact. Can you do the same thing and go through these items and explain how it was affecting impacts? Absolutely. As we heard from Ryan and Martin, there was an increase. There was an increase in competition out there. There was a decline in supply. Rigs runs east to west. The new market is north to south. bankruptcies affected it, the contracts are really the big thing, the contracts rolling off, there's no mechanism for rigs to get back the level of revenue that they did pre, the market slumping, demand slumping. Does Energy Transfer have any other assets in North Louisiana and Haynesville Shale? Yes, they do. And have those assets been similarly impacted by the growth of production in Haynesville Shale? Yes, they have. Would you say that this is an industry-wide issue or just a rigs issue? It would be industry-wide, it's not specific to rigs. That's all I have to say.
Okay. The tax return for the new comparison, and two, the protest is going to be and two, that is the thing that is listed as the agency influence again in king. And we
No, wait a minute, this, oh, sorry.
It's not a question, I'm really just trying to figure out.
No worries. This is when it was still a joint venture with Alinda, and if you can find the org chart, the updated org chart, it would have the correct legal name that is currently used.
That's short. And everyone has to do the interesting thing and Regency, Information Gas,
For this time, that would be correct.
okay, and an entity that follows the property tax return of federal city, I can change it. If we name of Regency Gas, that means the current owner of that. Okay?
Correct.
Okay, great. So at some point,
Restructure when Alinda was no longer a joint venture partner.
okay, great. And I want to talk about the look at, so you had, on the top line, you have the new gas pipeline one and the new gas pipeline two. And those are the, blown out, so Regency paying the pay gas and the, okay?
That is correct, and what Martin testified to right here.
Now, down the bottom line, we have the Regency GP LLC. And the top line, you have ESS Haynesville LLC, and if I understood correctly, it's only losing GE. What was that answer?
GE owns the general partner of RGP and the 0.001% interest in this joint venture.
Okay, and is GE still involved?
No, they're not.
Okay, so ESS Haynesville is also involved with the venture.
Correct.
What about the GP? Would that be legal?
That would be fine as well.
Okay. What about Regency Haynesville Partnership Company?
That one would have been fine as well.
Okay, when did these come through?
After Linda got out of the joint venture, so that would have been 2018, April of 2018. April, correct?
Okay. The folks that is leading to came to the state game to the council.
That one, I can't believe it, don't have it handy. That one I believe is still there. I believe, Riggs Intrastate Gas just drops right underneath that one now and goes up to Energy Transfer. So instead of this chart going out and down, it would just be a straight up and down.
Okay, and on this one, 42 is the big two, correct?
Correct. But like I said, Energy Transfer's org chart is 29 pages long. So I mean, there's, but yes, the direct path for Riggs is,
If it would be done like,
Yeah,
if
yeah.
it's expensive, and then just to get it up on the screen, the microphone as well. If there's a very important company, and the board member, under step two, there would be the third page for you. There is a way. Well, we have one. Oh,
yeah. Visual sometimes easier with our org chart, I understand.
The page prompting has given us
There we go. Yeah. Isn't there one more up here? Yeah. Okay, so this is our publicly traded entity. This is ET. Underneath ET is Energy Transfer Operating. Underneath there is the Riggs Hayesville Partnership. And the Riggs GP LLC, which appears to be still there. And then Regency Intrastate Gas LP.
Okay, so the Regency Hayesville Partnership Company and EFS Hayesville is only from the actual.
Correct. And this would be the entity right here that houses the assets, and these three entities are disregarded entities for federal income tax purposes. They all roll up to the parent company.
Okay, so
Does that help?
I think it does, so.
Regency Intrastate Gas LP.
Is that the one that you referred to as Riggs, is the one at the very bottom?
Correct.
And it sounds like one of the three, that you're actually who you're referring to, when you speak of Riggs, the entity.
Riggs, the entity, for me, it is one legal entity, company number 2324, and it's just this one box.
For tax purposes, it's not for legal purposes, there's three entities.
For legal, correct.
Okay, great, so. And get the kind of 2018. When did Riggs Hayesville Partnership Company go in April 2018 or 2019?
Here,
All the good news gave you that kind of minimum amount of Riggs Hayesville Partnership Company. It's made in April 2018.
okay, that one appears to be still there. The Riggs Hayesville Partnership Company, it is the EFS one that is no longer there, the EFS Hayesville LLC.
What about the Regency Hayesville Intrastate Gas? That would be the company.
went away after the joint venture. The partnership interest and the assets are two different legal entities. So for our purposes here, the assets are held at the lower level unit. So when the joint venture went away, the top row went away and Energy Transfer replaced it. The joint venture companies are no longer there. Any legal entity that had interest with Alinda has gone away. It would be the 100% Rig Painesville Partnership Company, and all of those roll up to Energy Transfer Operating. I'm not sure when they did the reformation, but it would have been after the Alinda sale or Alinda transaction in April of 2018. I'm keeping up. I don't know the specifics. That would have been legal and however they formed or sold the interest, that I would have been involved in that. No, there's a Alan and Martin talked a little bit. Martin talked a lot about the bar chart and how Linda Pipeline, Gas Pipeline 1 and 2 companies all intertwined. Disregarded entity. A holding company. They would have separate books and records if they had books and records. There may be no activity on one or the two levels above. Those aren't entities I would ever dig into if they have no assets or property tax relief. That's 31K to work for. It's a holding company, one of our many, I'm sure. It would fall underneath energy transfer operating, and would be another disregarded entity. Correct. I don't see on the chart, but in order to track all the way up, we would need to take a peek at the full board chart. That, like I said, it's 29 pages long, and we have to trace all the way up the tree. So it sit right under energy transfer operating. So it is possible that all of the rigs boxes, these 3 rigs boxes, would go up again to Tesla to eventually energy transfer operating. I could see ET Tesla Holdings being above it, but we simplified this just to look at the rigs entities. I couldn't verify that. These are not entities I deal with at all, as these are just going to be holding entities and have no activity or assets. Market value of the assets. I did. Currently, they're on type schedules being locally assessed. The type schedules do not yield fair market value and do not take into consideration economic obsolescence. So you would need to explore other ways to get to fair market value. As director, about a year. I've been an energy transfer since 2008 for 15 years. Are you on? And we're asking for information. Yes, there was an I believe economic obsolescence should be considered when valuing property or using and we have an appraiser, we have an expert that has calculated it and my opinion is with my appraiser. There is economic obsolescence on that pipeline. 2018 is not the year that we are here for. 2019, you just brought up. 2019, there was a sale in 2018, an arm's length transaction, and fair market value, that is, a sale is the best determination of fair market value. So in 2019, we really did assume that the sale was a true indication of fair market value. Now, the business Steve Grace up here in a little while, and he can testify to that, what happened in 2018. I know the outcome, he can talk. We did not prevail, we did not, entity was involved, but that's the year that I did not participate on it. We're still recognizing that there is a difference in the price schedules that we take into consideration, economic obsolescence and don't yield a fair market value for this particular asset. The schedules are a great start, I mean, a starting point, but that's taken a cookie cutter approach to say every system is operating perfectly that would adhere to the schedules in a perfect world, and there are other factors to take into consideration. That would be correct. In 2019, there's the additional factor of the dissolution of the joint venture. So now it's a wholly owned subsidiary. We have an arm's length transaction, and so we have we know the market value based on the sales. That's a major difference between 18 and 19. Not for 18. This 18 would have been reported as of 1/1, and the sale happened in April. I'm unsure if it was addressed in the filing itself, but there were discussions about this sale, and that would be with property tax partners and the assessors. I've read it many years ago. If I did, it would have been at a very high level. Like I said, I have over 130 legal entities for property taxes.
The 2018 partnership with the family Levi's pipeline sales and Router is a family partnership of this billing entity and is very comparable to the whole the same. The solution contract is fully independent, backing the money from stores and industry cases and and the Router deal is potentially Medicaid that leads to pricing and actions on property within stores and specific penalties. So I ask you, can you tell me specifically what is being sold and when is those cases taking place based on the physical information?
That's above the asset level, and that is what Mark Anthony was talking about. I was not involved in the sale at all. Rehashing what Mark Anthony said earlier. Belinda paid $25 million and we acquired their debt.
What you're saying that the sale
Their hope is that was for the, I'm unsure if they refer, it's not an asset purchase because it's a joint venture. But the assets are involved, so that is their interest in the joint venture assets. So they paid 50% essentially for the assets.
What are you saying essentially for the assets? Was it an asset sale or partnership interest sale?
It would have been a partnership interest sale, so I'm looking at the assets.
And so the question, I understand completely that there's no reason to disagree with separately. So, simply answer the question. If you secondly disagree with me,
It was not an asset sale.
okay, is there anything specifically indicating that we're going to add, I'm not sure the rest of this.
It was not an asset sale because it was a joint venture, so each party had interest. The assets sit, like we saw on the org chart, so many levels down from where Energy Transfer, Alinda and Riggs joint venture happened.
Okay. Anything, and agreeing with what the specific thing is, found for the property expense. And then the bill was specifically indicating that we're all Franklin or Jennifer something or something within some of the specific benefits. Is there anything that the that shows that specific company community characters within some of the specific benefits?
We never would sell just a segment of a pipeline, so there's no reason to look at just 3 individual connections. We would look at Riggs as an entire operating system.
And so, it's your opinion that the property tax purposes, Riggs to be valued as a review, and you think the property value, the thing that the tax individual characters?
I'm gonna back to this, reference of a unit, that was just kind of a loaded term, you're talking about interstate versus intrastate pipelines, is that how they have to say property tax?
Let me insert the word here for you. So is your opinion that the reason take your cross state as an LLC should be valued as a single business plan, and this is to value of the company and then other characters?
That is correct.
I'm not sure what you're saying there, especially to the company. Companies in Louisiana, assessed with this person.
We're not expecting. We have to look, we can't just take a pipe that is in Caldwell Parish and say, this standalone pipe is worth X. Our pipeline system is a unique asset. It is linear, it goes through, it's not worth anything if you're just looking at a county line. So you do need to look at the entire system to get a value for the entire system.
Okay, but I'm thinking, given the stability of the company in this case.
That's correct. And Louisiana uses pipe schedules, and the pipes in Louisiana should value fair market value. Using the pipe schedules does not yield fair market value. You would have to take in additional factors in, such as economic obsolescence. That's correct. Great question. Your business enterprise value is going to yield your economic obsolescence. So you would be able to identify, based on the appraisal, the business enterprise valuation. You would be able to identify economic obsolescence and then do the additional steps on just the standard table. I don't understand the question. For another parishes besides the three that are in dispute here. We pride ourselves in trying to work with assessors. These pipelines are here for decades. We're not going anywhere. We're going to be in Louisiana communities for a long time. Energy transfer continues to grow. We try to work across the table with assessors. The pipe tables are their tool to assess property. However, there are additional conversations, there are additional things that happen. Those are the conversations that you have to have with the assessor and work with the assessor to show them the tables do not yield fair market value. There are additional factors that we have to take into consideration. Here they are. Currently, Rings is paying 10%, or half of their NOI is property tax. 1 year NOI is $11 million. We pay $10 million in property tax. That's extreme. That shows that it's not fair market value. We need to have more discussions than just the tables that are being utilized. I am. Absolutely, a fantastic question. Those three parishes are the 42-inch pipe. Those are the three parishes that have the 42-inch pipe. The 42-inch pipe are the big dollars on the pipe tables. That is correct. And that is the 2009 expansion segment. We made a business decision to only concentrate on the 42-inch pipe. That was the 2009 expansion. You have to look at the whole system. We heard Ryan and Martin talk about, and I'm not the engineer or the operations person, but you heard them talk about. Correct. So I have operations, commercial experts, people, we have 10,000 employees, that help the property tax department. That we concentrated on the 42-inch one for this facility. defer to experts. Again, I'm gonna defer to I I'm gonna defer again to an expert to explain how to calculate economic obsolescence. In some years, it's on average, it's 30 to 40%. I was decided the 30 to 40% and reviewed all the work papers and had conversations with my experts. Yeah, conversations or well, property tax partners, my providers, and Arthur Financial Services, my experts that did evaluate the pricing. Which investors are you talking about? Alinda, earlier what they were referring to is Alinda being a private equity who their job is to go out there and seek projects to earn a high rate of return. That's their business. So what's the fact that they were offering that high rate of return after they went with the value of this company? I don't think that's what he was referring to earlier. I think that's why Alinda was not staying with the joint venture. No, no, it's really not, because when you say investors, I'm assuming that you're talking about the Alinda. I can't speak to Alinda's, what rate of return that they're required to earn on projects and when their bailout, bottom is, or what their model is for their ceiling and what they expect for return. So I can't speak to that. I don't think it even the reason why we're assuming the reason why Alinda wanted out of the joint venture. We didn't correlate it to how property is being valued.
county circle.
A rate of return could be useful. For example, currently, RIGS is 50% of my, or property taxes for RIGS is 50% of my expenses. I think that's very useful information and very extreme for a company to pay. I mean, in 1 year, net operating income was 11 million. We paid 10 million in property tax. That's excessive. Sure. And they have our invoice. It's been the appraisal. No, but you can calculate that. You can calculate it. You can read the appraisal reports, look at NOI, and look at how much property tax we're paying. Of course, you're talking about they receive tax will be paid, random numbers, and it's 50%, so that's not. We would have, I'm not sure, we could ask Steve when he comes up what conversations he had with the parishes in regards to that. Demand goes down. The transportation contracts and renegotiation of the transportation. A lot of the contracts are rolling off, and when commercial renegotiate, the rates are less than half as they were previously. When I first started in 2017, and we did not have one done for 2018, and then we had one done for 19, 20, 21. And I would assume they're in. Actually, 2019 was done last.
I think asking that question.
Yeah, you're right. 2019 was done last because we did rely on the Linda sales
And I was afraid of to, to, actually, go back and do an additional, review an additional.
That'd be a question for our property tax commission. They prepare and file all their renditions.
Would you review it?
I do not review them.
Would you ask them to review it?
As part of our stipulation, the information that Ms. McCavanagh testified to for 2019, 20, and 21 appeals, which you just saw, would be equally applicable for the 2022 and 2023 appeals, which are currently before you now.
No objection.
Okay. All right, we're gonna take a break. It is 12:35 now. We're gonna reconvene at 1:15.